What's going on, Matt?
I'm
Matt,
on the way to go see my. Can you hear me? Can you
a
hear
little
me?
bit, a little bit delayed, but I can hear you. A little bit
Yeah,
delayed.
actually, I'm having to use my hotspot on my phone. I'm on the way to see my grandson for his birthday, and I pulled off the side of the road at a Marriott. So I'm sitting in the lobby of a hotel that I'm not staying at.
Yeah, a little. It's a little bit like King Kong versus Godzilla from the 1950s black and white movies with the mouth movement.
Yeah, yeah. Let's go to the house.
Exactly. It's okay. We'll work with it. Not a problem at all. Well, everybody, welcome to Lunch with Lumbermen. Matt Lehman, Lehman's Lumber Guide, Ashley Buckle, Materials Exchange, Chicago, Illinois. Glad you could join us last week. We try to start a little bit early to get some people streaming in. Had over 150, almost 200 people watching last week, Matt, which was good between YouTube
Awesome.
and LinkedIn.
Great.
Yeah,
Hope you
so
guys
good,
learned something.
good stuff, man. And I was before the whole thing, I was boning up on stuff, reading the scouting guide. Really good. I wanted to so everybody. As I talked about last week, there was a good bite in the market on lumber. A little bit of panels seems to be a little bit more subdued this week. And if you read Matt's market conditions on the side, you can really get a good update on that. And I recommend that you sign up to get Matt's scouting report. But let's pull up the the forecast down on the bottom. I'll have Nick pull that up, and you and I can talk about stuff. So Matt, give me a little bit of update of what you and your scouts saw this week compared to last week coming into the market.
Well, it looks to me like, Ash, that I'm going to categorize this as a blanket kind of statement. It looks like the industry is reverting back to no fear of supply, just-in-time inventories. I think it's pretty clear that most everybody's probably covered. I think through probably mid-March is probably fair to say, but I've seen more people talking about this week, like keep your inventories at 4 weeks, which is they think that's a standard kind of workable inventory. I think that's on the light side of an inventory based on my membership. It's more like 6 weeks is more like an average, and 8 would be heavy, 4 would be light. But I know a couple of the large contractor yards are carrying 4 weeks of inventory, and they think that they're adequately supplied. So when I listen to people talk about, I guess, break the market into different segments. The wholesale segment seems to be very negative on the market, which is kind of ironic because they've got one mill told me today that 50% of their studs that they have sold are on spec and have no destination, and they're due to ship on Friday. So there's wholesale wood's backing up. Or yesterday, I think you talked all your other shows this week talked about two-tiered market, and I think we're having that two-tiered market now. Basis traders have a lot of money in their product, but there's just not a lot of place for wood on the ground anymore. There's the docks are full, warehouses are full. One mill told me this morning, a large Canadian mill, said that they know that a lot of wood got put into warehouses on the Canadian side of the border at the end of the year to avoid a duty at year end, and they're just going to expect the price to be higher later and be able to ship it. So I've heard of wood on the ground in Chicago and in Vancouver from BC mills. So it appears that some of the wood got just kind of side shifted, but it's interesting from a dealer side, from a builders and dealer side, everybody's talking about how good business is and how they expect it to be better going forward. They feel confident through March, but there again, the cutoff point is beyond March. Nobody has confidence that the market's going to do anything. So I'm going to go out on a limb and say that I don't think the bottom's in. We got a little pullback here. Maybe the bottom, I should say the bottom's not in, but I think that we've got a soft spot coming, maybe just for another week. And then I think as this wood gets kind of worked through the system, and all that wood that mills have in storage, if they've had it there for 2 months, there's no reason to bring it to market right now. It's there, it's available, but it doesn't have to come to the market anytime soon. So there's no reason to expect that it's going to be flooding the market. But my big takeaway, Ash, is that I think everybody's listening to Fed Chairman Powell saying that he's going to make things tough on us. But the American consumer just doesn't seem to be accepting recession.
Yeah, Matt, crazy. So I heard an interesting stat. I follow this one guy on Twitter, that the used car guy, and he said, he was calling for used cars to keep falling in price, and they've actually in the last 2 months ticked up in price, and people are willing to still spend unbelievable amounts of money for used cars. I mean, the used car market is up 47% in the last 2 years. And people are willing to go out and buy cars, used ones at 8%, almost double digit rates. They're coming up with the money somewhere, right? I mean, I think
that doesn't really make sense, because I saw a car commercial this morning for Hyundai or Acura, somebody. They're offering 2.75% interest rate. So when you're going to finance it in house.
Yeah,
that's a good deal.
Yeah, and I'm wondering, I guess you got to have an 850 credit score on that one, and I'm sure they work it into the price, right? But the whole point was,
if you looked around car lots lately, there's a lot more inventory out there. There's a lot more, and I think the urgency to sell is probably there. So I think I saw that same statistic you did, and I thought, well, I think I'm gonna go sell my car and go get a new one. I think I can get a better deal.
Yeah. Well, the crazy thing is, man, they couldn't get less inventory than they did last year. I have seen a little bit more showing up. One thing back on lumber that I saw that was interesting, and Greg mentioned this the other day. He goes, a lot of the week, like, you all get these calls. Hey, I have a wholesaler buddy that has a 2x6 10-foot car. They need a desto on, right? Or, a lot of the weak hands that didn't want to own lumber in the first are blowing out. But on the second side, the mills raise their prices so damn high, there's that big air pocket in between, right? So I think what we're trying to do is get some kind of everybody got real excited because it was the best market we had in 6 months, right? So you get this speculative buying, mills raise their price because they think we're going back to 4 digits. Maybe they're not thinking that, but anyway. So now you got this big high ask price at the mills. Wholesalers with wood they bought under the market 2 weeks ago trying to move it off, and I think we're kind of trying to find the happy area between the mill's ask price and the wholesale wood, and I think we're in the process of finding that, right?
Yeah.
Go ahead, sir, Matt.
Well, I was thinking about what we were going to talk about today, and I think the big takeaway for me this week is how people are returning to a cautious and negative inventory position. But what they're saying about their sales and what their builders are telling them is very positive. I mean, it seems like the housing news that's new has been more encouraging than discouraging for the last couple of reports, and I think we're gonna probably see new home inventories rise, and there's a big easy solution for that inventory. I think we see inventories go higher, then it's probably going to be perceived as negative, but it's also going to encourage the holders of that new inventory to approach investors of build to rent and dump some inventory. And I think that the thing that's keeping buyers out of the market right now is probably just $50,000. Pick the price range up to $50,000 in the markets. We're off and rolling again.
Yeah, Matt. What I look at on existing homes and new homes, where everybody had their mindset a month or so ago, the news coming out is it's better than we expected, right? It's not. So you got this better home.
Everybody's surprised about it, but they're not changing, not shifting gears from how they've approached the market for the last 3 or 4 months, which is bearish and having a light inventory and liquidating inventory when you get it. So this is gonna be a nasty week as far as mill sales and wholesaler sales. I know they're not selling a lot, so which means they're reducing their order file, but it also means that the wood in the field is getting consumed. Even though weather's been kind of bad for some parts of the country, there's still a lot. We're not losing complete weeks of downtime for most places. So I think the surprise is to the upside.
Yeah, no, and what we're seeing here is I was just looking at I was going through the different market conditions. One thing that I saw this week, so where there was volume on our platform this week was OSB, and wasn't real sexy or exciting, but there was some volume, right? And one person that was buying, here's what he told me. I built as much inventory as I wanted to on lumber, and now I feel like I don't want to load up any more of that. I want to put some in on OSB because this is what they said. I don't see a potential of a 50% downside on OSB, but he goes, worst case is 10%. So I'm trying to build based on that, if that makes sense.
Yeah, I've heard a lot of people were dabbling in the market at $200, putting in 10 times more than they normally do. So I think we've got to be careful about the speculative position that people are taking on OSB, but because that's kind of a new home construction dependent item. If it doesn't have new home construction, then it's oversupplied. But I know we talked a lot about
and home center, and Beamer was saying yesterday that the home center takeout for this time of the year, and I don't have any stats on this. It was started a little bit early, and it's better than they expected too, right? So.
Yeah, and I think a lot of that has to do with weather because here in the South, it's been 60 degrees all through January. So just the last couple of weeks, we've gotten a little bit of rain, but January was certainly a much more favorable market for lumber consumption. But I thought those same places, those same boxes, if you go look at the inventory they've got nothing extra on hand outside. Just the shelves inside are full, but they're counting on that just-in-time inventory turn. And so I think the VMIs are loaded up and their reloads are loaded, so they got plenty of wood coming to them. But the biggest thing for me when I think about the big picture is it's beginning of February, and winter looks like it's not going to be the big killer that we thought it could have been in the past. But March is coming soon, and April's coming soon, and now's the time to be buying wood to have wood on the ground for April, and it's time to start be thinking about that. And builders are going to be doing a lot more in April than they are in January and February, just because of the length of the days, the favorable weather conditions. It's like a guy told me today. He said, take the big builders like Horton, Lennar, KB, those guys like that. They don't make money unless they're building houses. They're going to build some kind of houses. They're not going to not build. So it's not like we're going to stop doing anything, and it's going to get. Consumption of lumber is going to get, or demand for lumber is going to increase as we get closer into spring, just because of seasonality, if nothing else. So I think it's not a good time to be overly bearish on the lumber market.
I agree. James Breck has an interesting question, Matt. It said, do you see the non-traditional holders of inventory, shadow inventory, creating any back pressure in the pipeline? I'll answer it the way I see it, James. I'll let Matt jump in. So last year and 2 years ago, I would have called that shadow inventory. And just as anything in life becomes from non-traditional to more traditional, these people that came in and started buying this shadow inventory, they're regular buyers all the time now. They aren't really going back and changing because once you get a taste of freedom, you never want to go back, so to speak. And they see the value in buying now, and I still see them continuing to keep larger amounts of inventory for larger amounts of time because they're buying it for jobs and putting it into reloads. And I know calling reloads this week, asking them if they had any inside storage. There's still a lot of storage is pretty full. So that's my answer to that question. I think they're a mainstay in the market now. Matt, what do you think?
Yeah, I think that the non-traditional buyers, the holders of inventory that James is talking about, is probably, I would think it's mostly multifamily people that are able to. Yeah. They were buying. They buy from their contractor yard. They buy the whole package, and they end up being truck straight. Instead of doing that, they're buying their straight truckloads from brokers who are giving them better deals. Primarily brokers, but some mills are participating. But that strategy worked fine when the market's moving $1,000. And because when you're a non-traditional holder of inventory, you're cutting somebody out of the loop, which is your independent lumber yard or your contractor yard that you typically buy from. You're taking business away from them, and it works fine when you can see a $500 appreciation in the price of your product, and it's a good investment. But if the market starts to get kind of flattish and we only trade in a $200 range, that program is not going to hold water. These guys they're not going to see the value in cutting the contractor yard out. So I think that was COVID phenomenon that's probably going to end up going away at some point, probably later in the year.
James, that was a good point by James. I think I see where he's coming to now. He said we're seeing the back pressure impacting EWP, and I will say that I understand where that question's coming from now, because I knew a lot of non-traditional buyers at EWP, or ones that actually bought EWP through the traditional ways, that bought extra hedged inventory across the country last year, and then had to find spots to move it off. They were calling us, asking us if we could list it on the platform because they needed to move it. We even had some mills calling us, asking us if they could move some excess EWP on our platform, or some type of engineered products. So I think in that case, I understand why you're asking the question, James, and I think in that case it probably makes sense, right?
Yeah, I agree.
With that said, the one thing that I still see an issue with, we were talking about yesterday, lumber's kind of come back enough where it's not creating that big of a that tough of a price increase on houses. Everything else is starting to come back. The real tough thing still, I think, is labor. Does that make sense?
Well, but I've heard from a lot of guys that are saying that their framing contractors are looking for bigger, longer commitments because they feel like their builders have short commitments of a month or two, but they're not really promising anything out further than that. So I don't think there's not a shortage, but there's a fear of the jobs going away, which I don't expect that's going to. I don't think we're going to end up with an overly supplied job market on the construction side.
Just on the construction side, I just don't see where the new labor is going to come in. We got to do a better job getting more people into the trades. I know people are pushing it, but man, if we go to build 1.6 million housing to 2 million again, which we will at some point in the future here, where are we going to get all this labor from, Matt? I mean, I know we could talk about off-site building and all that, but that's a
modular
drop in the
home.
bucket.
The answer is going to be modular. The modular guys think it's a solution, right. And it could be.
Yeah,
it's going to. I think we've got to get away from the dependency on people, on manpower, and more on machinery and AI.
Hey, so question: the forecast I threw up here, Matt. When we're looking at this versus where we came from, where we're at, what should we read into this on the decision points here?
Well, for the next few weeks, it looks like it shows that the market's it should firm through February. And statistically, February is typically an up month, March is a down month, April's an up month, and then we sell off into the summer. So we're at a point where the market could go in a volatile sideways pattern for weeks or months at a time, not months but weeks at a time. And I think there's so much about the market. We've been working with disruptions for so long now that we're kind of getting used to them, using for an excuse. And I think if you look back for the last 6 months, how the lumber market's been in general, it's been from a fear-based perspective. Everybody's been thinking that things are going to, because the Fed every time the Fed comes on, they just say, don't get all excited because I'm getting ready to slap you again. But the American consumer is they're just not accepting the recession. I mean, it hurts. Here's a good example of I think what I did this morning was a perfect good example of what I'm seeing throughout the lumber industry. I had 2 pairs of tennis shoes that I was going to put in the washing machine to get them clean because they walked in the yard and they got muddy. And my wife said, "There's something in the washing machine. You can't wash your tennis shoes." And I said, "That's not a problem." So I put them outside and I went to the store and bought a new pair of tennis shoes.
That's a good solution.
And it was. I mean, it was not logical. It wasn't rational. It had nothing. I mean, I just did it because I was going out of town and didn't have time to wash my tennis shoes. So I said, well, I'll treat myself to a new pair of shoes. But I didn't stop and say, wait a minute, what's the recession doing? What are interest rates doing? What's this going to be the impact on my take-home pay, my disposable income? I didn't think about it. I just went and did it. And I've seen some statistics this week that show that for the lower income people of the country, the lower echelon income-wise, their credit card debt is increasing. Their cash disposable deposit, income and cash in the bank is getting lower. But when you get away from that the bottom 10% tier, it's really not. It's not hurting other people. They don't like it, and it's uncomfortable, but it's not stopping them from behaving the way they want to.
What I did yesterday, Bob, and hopefully my wife never watches this. I wanted a bag of dill pickle chips, and that's all I wanted. So she picked me up from the train, and I said, "Hey, honey, let's go shopping for some groceries." And I bought $200 worth of groceries, but slipped a bag of dill pickle chips in there. I'm not supposed to eat those.
It cost you $200 to get your pickles.
It cost me $200 for a bag of dill pickle
You had to
chips.
sneak
Now
your pickles in.
we got some other stuff in the process, but so I contributed to the economy doing that.
Good strategy.
So hey, what's up? What's going on up at over at Layman's Market Report Lumber Guide? What do you have coming up in the next few weeks? What should people be really looking at, highlighting for you? What should new people be doing to sign up for your product?
That's kind of a $64,000 question because at this point, I think all the people that are here today probably are aware of what we both do for a living, and they've seen it. They've either decided against it or like I saw one guy said in a comment last week. He said, "Don't bother me with trying to sell me anything. I'm just there for the free information." I go, "Well, you're honest, man." He said, "I'm
That's
just
awesome.
looking for free market insights." I said, "Well, we'll start giving you the value of what you're asking for, which is nothing." But so our
That's great.
strategy this year is we're still trying to grow, but we want to keep that exclusivity thing available as well. So we're going to probably be putting more emphasis into the forecast and expanding that a little bit, maybe a little more pricing action and have a little expanded prices twice a week rather than just once a week. But just as long as, I hate to say this, but as long as the market's confused and they don't know what people are unsure about what's going to happen, we do well. The time we don't do well is when it's an easy market and it's just flat and still. But I still think we got a lot of reasons to expect the market to be volatile and there's no reason to think the disruptions are out of the picture and the emotional reaction to those. But still, the FTPs are my go-to indicator, and they stick in. Say right now February is going to finish higher than it starts.
So what do you got going for the Super Bowl this weekend? Anything good?
Yeah, we're two families trying to compete over who wants to hold the festivities at their house rather than at ours. So I think we got one of three options, but I don't really care. The Panthers aren't playing, so it doesn't make any difference.
Well, everybody can watch for the Materials Exchange halftime commercial on the Super Bowl, and
Yeah, if you miss it, you blink too quickly.
if you'll blink too quickly. Well, listen, Matt, it's great. You actually your internet and everything picked up perfectly, and it just shows how awesome technology is. You literally stopped at a side of the road, and it's like perfect, like you're sitting here.
Well, I was I told the guy in the front of the desk. I said, I got to meet somebody in about 15 minutes for a meeting here. So can I sit in your lobby? And he said, yes. So I didn't. It was truthful. I did have to meet somebody, and I did. So, but it just.
Did you get any? Did you get any of the free coffee there?
I'm looking around. I can't find it. I think they've already taken it. There's just water over there right now.
All right, listen, I'll let you get back on the road. Thank you. We're grateful for all the people that come and watch every week. You really help, especially when you help give feedback on here. Matt and I'll do this again next Thursday, and we'll look forward to seeing you then.
One more thing before you go.
Go for it, Matt.
I'll make sure. I don't know if you guys everybody's aware of your new platform.
Yes. So the new apologize. Thanks, Matt. We put our press announcement out this week. The new platform. You come to the same exact www.materialsexchange.com. You want to create a new password. There is a site there to tell you exactly how to do it. If you don't know how to do it, there is the contact information, which will ring through to me or one of the support staff to help you get guided in walking through it.
Can you show that? I was going to say I tried to log in and my password didn't work. Can you put a screenshot up of where to do that, so in case people want to find out how to get on?
Yeah, if Nick could put it up, since I have my mouse detached here right now, where I'm at in this room. Hopefully, I think Nick.
This is an impromptu request, but I was just noticing.
No worries. So I'll have Nick bring up the sign-on page for us while we're sitting here chatting. I appreciate that. Let's see if he can bring it up for us here. So there, Nick's bringing up the sign.
Where do you go to set the new change your password?
Down at the bottom below sign, it says create. Is
Okay.
that the create an account, Nick, or sign, or when you say sign, or forgot password? I'm sorry, but I'm sorry. There,
Okay.
it's right down where it says forgot password. And this is on this new one. You can actually put your own password. We don't have to do it for you.
Yeah, and your old password won't work. Is that correct?
Correct. So just hit the new password, submit your email below, and it'll set up for you.
So what do you like about this platform compared to the other one that makes this one better?
Well, I will say we're working through a few issues on it right now, which are pretty simple, which is great for a new platform. What I like about it is the look and feel of it is a little bit less like a spreadsheet. So it looks a little bit less like an Excel document, more like an exchange you'd see on like a Robinhood or an eBay or something like that. So it's a little bit intuitive. I think I like it because it's a lot easier to change items, to add items. It just seems so less clunky than the last one.
What do you feel like what's the primary your top 5 SKUs? What are you selling the most of on the platform?
7/16 OSB, 2x4 number 2 Southern Yellow Pine, 2x4 104 and 5/8 Western Eastern Dry Dug Fir, and 3/4 T&G OSB are some of the main items that we're selling.
How about Euro? You can play on Euro?
In Euro, we did 75 trucks of Euro last week. And it was across the board, mainly straight 2x4 12s, 2x4 16s, some random trucks. Occasionally we'll do some of the odd stuff in Euro, 2x10, 2x12, 16s, studs, but a lot of the big, just bread and butter contractor yard, multifamily type of items.
Scott had a question. March contract down $17 a day. Is that a bottom? The 50% retracement is right around 440. 62% retracement is going to be down in the 20s, but I think there's a gap fill at about 467. So somewhere between. I thought I was looking for a bounce from around 447 to 50% retracement back up to 467, but we went through that. I think we're down to, I think it was low 438 earlier. But
one of the interesting things I saw on the futures, Matt, which I don't watch a lot of, but that March-May spread was blowing out a little bit. Right.
Yeah, if you think about it, it's out at like $20, but I use $18 as a carry from contract to contract with interest and storage and all that kind of stuff. So it's at about 18 or $20, it's kind of normal. When if it's lower than that, it's probably from March to May, it's probably too low and it's going to expand. But I think it's probably just about where it ought to be right now.
And think about how big of a premium went out. It should be coming back in right now like this.
Yeah, think about the basis trade went from $90 to positive to -5 or whatever it is today. But depending on what you guys figure cash is. I've heard anywhere from 400 for basis traders, 380 basis traders, up to 450, 460 meal price. So we got a $50 difference in that, and just in the spruce market, it seems it's definitely two-tiered for the moment.
Yeah, look at all these basis traders that got in a month and a half ago and rode that basis all the way up with those margin calls probably want to sell some stuff right now as they see it coming in.
Yeah, and if it's getting ready to ship, it's stuff that it's getting harder to sell, so you probably could get a good deal. So if you guys know anybody if you got any brokers that have done some basis trading, you might want to hit them up and see what they're offering. That's
all right, Matt. I appreciate
it,
my friend. Get on the road, and thank you so much, and thanks to all you listeners. For Scott Thompson, thanks for the question on the futures. We'll talk to you all soon.
Thanks, guys.
Yep.